What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about the spot price of silver still hanging out in the $21 an ounce range, premium excluded, of course. But we also have to talk about Jerome Powell of the Federal Reserve now seeming to kind of hint that a recession may be inevitable. We have a couple of other retail sales reports to go over and a couple of ideas that I have regarding diversification. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Come and join us in the Precious Metals VIP Club for giveaways, live streams, deal alerts, and a whole lot more. And of course, make sure to go and get your 6 free stocks by downloading Webull and funding your account. Refer one friend to win all the way up to 100 free random stocks. Refer 2 friends for a chance to win either a free share of Starbucks, Apple, or Google. Everything will be linked in the description. So today is Tuesday, May 17th, 2022. The current spot price of silver, as I'm filming the video, is $21.68. It's up 9 cents today so far, or up 0.42%. A decent green day for the beautiful white metal. Spot price of gold is $1826.70. It's up $2.80 today so far, or up 0.15%. And of course, the gold to silver ratio is in the 83 to 84 to 1 range. But of course, that's as I'm filming the video at like 9:30 in the morning, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. So today, I wanted to talk about a couple of different things. Obviously, we're going to be talking about the silver. We're going to be talking about the gold. I wanted to talk about the spot price. More importantly, I wanted to talk about the stack price and diversification. And as you can see on display, we have a nice little display, a nice little selection, all different coins, rounds, and bars, a little bit of silver, a little bit of gold. But before we can even get into the money, I think it's important that we first talk about the currency, and more specifically, the general state of the economy and what the Federal Reserve is now coming out and starting to say. And before we even get into that, I first wanted to talk about and go over the retail sales report for the month of April that was just released this morning. Expectations were that we would see a rise of 1% according to Dow Jones estimates. And by looking at the report, we can see that there was a rise of 0.9%. A slight miss there, but still good news nonetheless, because there were a lot of concerns that the report wasn't going to look so good. And something that I think we can take a look at this week that I don't think a lot of people are even considering at this point: Walmart versus Target. We also have Walmart earnings coming out today, and we have Target earnings coming out tomorrow. I only bring this up because Walmart is considered a consumer staple, while Target is considered a consumer discretionary, which means during rough times economically, we usually see a decline from Target and an incline from Walmart for probably obvious reasons. So let's keep an eye out for those earnings reports. Could be another indicator that a recession is on the way. Which, by the way, is why I was kind of nervous for the retail sales report this morning. We already had a major miss on GDP expectations, year-over-year inflation expectations, month-over-month inflation expectations, core inflation expectations, and as of yesterday, New York manufacturing expectations. These are all recession indicators, which had me on the edge of my seat waiting for this report, but it looks like we actually got some decent news there, and the market is rallying over it. I mean, just take a look at this. We have the S&P 500 up 1.27% today so far. We have the Dow Jones up 0.93% today so far, and we have the NASDAQ up 1.82% today so far. Green across the board. Everything I'm looking at is up, up, and away. Will this last? Will this be short-lived? Time will tell. Again, I'm filming this video at like 9:30, 9:40 a.m. Eastern Standard Time. But hey, since we're speaking of stocks, make sure to go and get your 6 free stocks by downloading Webull, funding your account. Refer one friend to win all the way up to 100 free random stocks. And refer 2 friends by the end of the month, and they're going to give you a free share of Starbucks, Apple, or Google. Webull link in the description. But now moving away from stocks, moving away from the retail sales report, and moving away from Walmart versus Target and whatnot, I also wanted to talk about what the Federal Reserve is now seeming to come out and hint a little bit more, leaning toward a recession at this point. That's what it seems. And then after we get through that, we're going to get back into the silver and gold, don't worry. But I was reading through a couple of reports, I was listening to a couple of interviews, and I was paying very close attention to some of the things that Jerome Powell has been saying. And a couple of days ago, he came out and said that our goal, of course, is to get inflation back down to 2% without having the economy go into recession. Or, to put it this way, with the labor market remaining fairly strong. That's a quote from Jerome Powell, chair of the Federal Reserve. Now, the reason I bring this up is because the first half of that quote has been reiterated over and over and over again. The goal is to get inflation back down to about 2%, 2.5%, 3%. That's been the goal, and that's what everybody has been talking about. But there was never an or. There was never that second half of the quote. To put it this way, with the labor market remaining fairly strong. So in other words, if we do fall into a recession, but as long as we keep the labor market propped up and we don't see like a 5, 10, 15, 20% decline over there, that's really all that matters. I'm paraphrasing at this point. This is not what Jerome Powell said. This is just me interpreting it. It seems as though he's hinting that a recession may be inevitable, but as long as we keep the labor market strong, as long as people are working, as long as people are making money, we're going to be okay. That just seems to be what Jerome Powell is saying right now. Now, keep in mind, the Federal Reserve does in fact have the power to intentionally send us into a recession as a method of, like a last resort method of trying to get inflation under control. Remember, we have inflation right now for a couple of different reasons. One of those reasons has to do with people spending like crazy. We are still transitioning out of an overstimulated economy. We're just now getting away from how so many people have had more money than they've ever had in their entire lives before. And this isn't the nation of high financial IQ. So we've been seeing spending, not on essentials necessarily, but non-essentials as well. And it's been driving the price up of pretty much absolutely everything. And obviously that's not the only cause of inflation right now. We printed an ungodly amount of dollar bills over the last 2 years, and we also have supply chain crisis, and there's a couple of different things going on. But the Federal Reserve does in fact have the power and the ability to send us into a recession as a method of trying to combat inflation. Now, this is something that's supposed to be used as a last resort method of fighting off inflation. And obviously, over the last couple of months, we have seen a steady increase when it comes to inflation. In January, we learned that December inflation was 7%. In February, we learned that January inflation was 7.5%. In March, we learned that February inflation was 7.9%. In April, we learned that March inflation was 8.5%. And now here we are in May, we learned that April inflation came down just a hair, 8.3%, but there's fears that inflation has plateaued sky high. That's not good. It's one thing to have skyrocketing inflation, but it's another thing for inflation to have skyrocketed and then stay up there in the sky. That's definitely not good. That's definitely not what we want to see. And it could just be a bump in the road. It can go one of 2 ways at this point, or I guess technically it can go one of 3 ways at this point. We're going to have to wait until June to figure out what May inflation's looking like. But obviously, if it's still in the 8-point-something range, then yeah, it's an even bigger concern that inflation has plateaued. It could be a bump in the road, and then we're back on the rise again. We could see closer to 9% inflation the next report comes out. Or, hopefully, fingers crossed, we're actually beginning to inflect down and we start to see that decline. So it can go a couple of different ways. But regardless, the Federal Reserve does have the power to send us into a recession as a method of combating inflation. But here's the thing, the Federal Reserve might not have to intentionally send us into a recession if we go into one on our own. We're already halfway there. The first quarter of the year, we saw negative GDP growth. And a recession, by definition, is 2 consecutive quarters of negative GDP growth. We're already halfway there because the first quarter of the year we had negative GDP growth. We're not going to find out what GDP is looking like until the third quarter of the year, and then we find out what the second quarter was like, but we're halfway there, and I'm going to be honest with you. So far, it's not looking so good. It's not looking so hot right now. Like I said before, inflation has been on the rise, and it appears that inflation could potentially have plateaued, which is also not a good thing. We had a major miss on GDP expectations for the first quarter of the year. We had a major miss on this past month's year-over-year inflation expectations, a major miss on month-over-month inflation expectations, a major miss on core inflation expectations, and a major miss on New York manufacturing expectations. If we keep going down this path, we could learn in the third quarter that there was negative GDP growth in the second quarter, which is technically an on-paper recession right then and there. So we might not even need the Federal Reserve to intentionally send us into a recession. That might happen regardless. Only time will tell. All I'm going to say is brace yourself for impact. This is why I've been encouraging people for the longest time. I've been encouraging people since late 2017. Get yourself prepared. Even during the good times. The good times are not times to kick back with your feet up. The good times are times to prepare as well. So that when we get to the inevitable bad times, because there will always be good times and there will always be bad times, during the bad times, you'll be a little bit better off than everyone else who has absolutely no choice but to scramble because they didn't prepare themselves. So moving away from all of that, moving away from the Federal Reserve, moving away from the stock market, moving away from all the different reports and the expectations and GDP and all of that, let's now get back into the silver and the gold. As you can see on display, we have a nice little selection. As I mentioned before, didn't really go over what we have over here, but in the top corners we have Creatures of the North, the Werewolf, and the Kraken. We have a 5-ounce Aztec calendar round. We have 2 10-ounce silver bars right here, a sunshine bar on top of a bull bar. We have a 1-ounce bar over here, a Westminster bar. We have 2 Queen's Beasts, the Yale and the Greyhound. We have a nice little pile of 90% junk constitutional silver coins, some Mercury dimes right here. I think there might even be some Roosevelt dimes in here. We have some Walking Liberty half dollars over here. And then, of course, at the bottom, we have a nice little lineup of fractional gold coins, a 10th ounce Kookaburra, 10th ounce Britannia, 10th ounce Maple, 1/4 ounce Philharmonic, 10th ounce Eagle, 10th ounce Krugerrand, and 10th ounce Philharmonic. That's what we have on display today, or should I say this week. But I wanted to talk about the importance of diversification, and I do have a video coming out on Sunday which goes into a little bit more detail, but I wanted to talk a little bit about diversifying, because it's not just about diversifying with different assets. Of course, you can diversify by putting some cash into precious metals. Of course, you can diversify by putting some cash into real estate. Of course, you can diversify by putting some cash into a business. Of course, you can diversify by putting some cash into the stock market or into index funds or something like that. But what about diversifying the way that you diversify? Are you a diversified person? Do you have your cash parked in a couple of different realms, a couple of different markets, and a couple of different types of assets? If so, you might want to diversify the way that you are diversifying. And this can go a couple of different ways. We're going to stick to the precious metals, obviously, but when it comes to the precious metals, might not be a half bad idea to go after multiple types of precious metals. Now, me personally, I only go after silver and gold. Those are the only precious metals that I'm personally willing to stack at this time. But I think that's enough. And I think the silver has its own pros and its cons, and I think the gold has its own pros and its cons. And as I mentioned in a video that I posted a week or two ago, I believe if you're stacking both precious metals, each of their pros cancel out the other one's cons, or at least the most part. And by that I mean silver, a lot of growth potential there. Unfortunately, a lot of volatility there as well. Gold, on the other hand, very, very, very slow mover, but at the same time, much more stable, especially during the rocky times. Sure, gold doesn't rocket the way that silver has in the past, or the way that silver can in the future. But at the same time, when silver takes a massive beating, or when everything's taken a massive beating, gold comes down a little bit, but not nearly as dramatically as silver. So it's almost like getting the best of both worlds if you're parking your cash in both metals. That's just the way I see it. That's just my opinion, by the way. I'm not a financial advisor. This is just me documenting what I do and my own experiences and what some of my decisions have been over the years. But I decided to go after a little bit of gold after I spent the first couple of months of my stacking journey really dialed in on silver. I decided to pick up a little piece of gold, and from then on out, on rare occasions, I would pick up another little piece of gold and then another little piece of gold. Silver is obviously my precious metal of choice. It's my priority metal. It's the one that I am really lasered in on right now and I take way more seriously. And I'm not really overly obsessed with gold at the moment. I continue to stack it anyway, even though it's been a little while. I'm overdue for my next piece of gold. Even though it's been a little while, I'll continue to pick up a little piece every now and then, strictly for diversification purposes. That's the reason. That's the primary objective. That's why I pick up gold from time to time. It's simply to diversify, and it's to add a little bit more stability to the stack, or a little bit more of, I don't want to say a safe haven necessarily, but somewhat of a flight to safety. That's what I think a lot of people use gold for, especially the big dogs, the top income earners, the wealthiest of the wealthy. They turn to gold during rocky times to help keep them afloat and to give them a sense of stability during times of economic instability. And if there's one thing I've learned over the years, it's that if you want something you've never had, you have to do something you've never done. And if you want what the 1% have, you probably shouldn't be doing what the 99% do, which is why, or one of the reasons why I turned to silver and gold in the first place. And there's no looking back. I've been doing this for, at this point, 4.5 years. I'm coming up on half a decade of stacking, which in the grand scheme of things isn't a very long time. But it is a pretty decent chunk of time if you think about it. Going on 5 years, it's a pretty decent amount of time. And like I said, no looking back, no regrets. I will continue stacking for long-term wealth preservation purposes. I know during these weird, wacky times where things are up when they should be down and things are down when they should be up and nothing seems to make sense at the moment, I personally believe it's all going to level out over time. I believe it'll all make sense in the long run. I believe right now is just basically a speed bump. I think the inevitable will happen. I have my beliefs when it comes to the precious metals, which is why I'm continuing to add to my precious metal stack. It's also why I continue to add to other assets as well. The silver and gold, those aren't the only things that I put my cash into. I have a couple of different ways of investing. I have a couple of different ways of building wealth and preserving wealth in different ways. Like I said, diversification. But when it comes to the silver and gold, you can diversify beyond that as well. Sure, you can diversify with the precious metals. You can diversify the precious metals by going after multiple types of precious metals, but you can diversify beyond that as well by going after different denominations or different sizes. Like, for example, you can go after the 1 ounce silver bar. Sure, those are pretty common. You can go after the 100 ounce silver bars, because each of those have their pros and cons as well. Sure, the 1 ounce silver bars are a lot more practical, a lot more easy to work with. Think of it as a $1 bill versus a $100 bill. Each one serves its purpose. You want to have a little bit of both for completely different reasons. One for smaller purchases, one for larger purposes. That's how I see the small increments of silver versus the larger increments of silver. Now, of course, the largest denomination I have would be the 10 ounce silver bars. And at the moment, that's probably as high up as I'm willing to go. I'm not closed-minded to going beyond that, but at the moment, I'm not really interested in anything over 10 ounce. I don't really want to get the 25 or the 50 or the 100-ounce silver bars. I don't even have the currency for that to begin with, so that's kind of out of the question anyway. But it can go for different levels of purity as well. You can go for 90%. You can go for 80%. It doesn't have to be 3 nines and 4 nines fine. Silver is silver at the end of the day. What difference does it make if the purity is not the same? I go after 90% nowadays, almost exclusively. That's pretty much all I've been stacking, for the most part, for the last about 2 years. Ever since things really got flipped upside down and everything's been nonsensical, I've been leaning way more heavily in the direction of 90%. And what's funny is I never used to like the 90%. In 2019, I decided, hey, you know what? It's probably smart to diversify and integrate some 90% into the stack. So that's what I was doing that entire year. Wasn't too big of a fan of it. I was just picking up a little bit at a time. Then 2020 happened, and I saw some big opportunities to get 90% at a really cheap premium, because the premiums on pure silver spiked before the premiums on junk silver spiked. So I was able to acquire a whole bunch of 90% for very, very cheap. And then when the premiums on 90% ended up going up as well, I had noticed that they were still cheaper than the premiums on most other pieces of silver. So I ended up spending the second half of 2020 stacking almost nothing but 90%. I went most of 2021, or actually I went the entire year of 2021. I probably picked up a couple of pieces of silver that weren't 90%. I had to have. There were probably a couple pieces that I picked up that year that were pure silver. But for the most part, that entire year, last year, pretty much nothing but 90%. This year so far, I have not picked up anything that wasn't 90%. I haven't even picked up any gold this year. I haven't picked up any gold, haven't picked up any pure silver. This entire year has been dedicated to 90%. Now, that's not really by design. It's just because that's what's the cheapest right now for me. The point being is diversification is key. You can go after the 1 ounce silver bars. You can go after the 100 ounce silver bars. You can go after the 3 nines fine, the 4 nines fine, the 90%, the different fractional gold coins, the different fractional silver coins. Like, for example, the silver dime is about 1/14 of a troy ounce. The silver quarter is about 1/6 of a troy ounce. Silver half dollar is about 1/3 of a troy ounce. And if it's 40% silver, the half dollar is about 1/7 of a troy ounce. These make sense for a couple of different reasons, especially if the spot price were to go dramatically higher than where it is today. If the spot price of silver goes back to its all-time high, or if the spot price of silver reaches a new all-time high, I think the 90% junk constitutional fractional silver coins could really help us out, especially when it comes to breaking a troy ounce or making change for a troy ounce. That's just what I believe, and that's why I'm going to continue stacking the 90%. Sure, I'll keep my eyes peeled for other opportunities. Of course, I will pick up some pure silver and some random gold coins from time to time when the opportunity presents itself, or, you know, when the next Creatures of the North coin is released. You better believe I'll make an exception for that. But point being is that diversification is key, especially during these times. And like I said before, you can diversify beyond the precious metals as well. In no way, shape, or form would I recommend to have your entire life savings in precious metals. Absolutely not. Never in a million years would I recommend that. I think the silver and gold can absolutely be helpful, especially during rocky times, and especially if you fast forward years, decades into the future. I do believe it'll pay off, but I think diversification is even more important than exclusively focusing on precious metals. But that's just me. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to everything shared, when it comes to the retail sales report, good news or bad news there. When it comes to the Federal Reserve, or I guess more specifically Jerome Powell, and coming out and seeming like he's starting to hint that a recession may be inevitable, and now the focus is to get inflation down but also make sure the workforce remains solid. Head on down to the comments and let me know anything and everything related to today's video topic. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs, and a lot of the products are helping us raise some funds and awareness for different charity organizations, by the way. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, live streams multiple times a week, deal alerts on silver and gold almost every single day. You can watch all of my videos early and commercial free, and every Saturday morning I post a brand new vlog, and there are a ton of other perks as well. VIP Club link in the description. I guarantee you the value exceeds the cost. And of course, last but certainly not least, make sure to go and get your 6 free stocks by downloading Webull and funding your account. Normally it's 2, but they bumped it up to 6 for a limited time only, so capitalize on that while you can. You can deposit any amount, even if it's as little as a penny, and it still works. You still get your free stocks. If you refer one friend to the app over the next 2 weeks, they're going to give you up to 100 free random stocks. And if you refer 2 people to the app by the end of the month, they're going to give you either a free share of Starbucks, Apple, or Google. It's completely random. You get what you get and you don't get upset, but you win no matter what because you're still getting something out of it. Webull link in the description. Time is running out. Don't pass up on an opportunity. If you don't want the stocks, go and get them anyway. They're free. Then just sell them. Congratulations, now you have the cash to go and get you some silver or gold if that's what you want. Webull link in the description. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything shared in today's video? When it comes to the retail sales report, is that exactly what you were expecting? Were you expecting the number to be higher? Were you expecting the number to be lower? Is it pretty much right on par with what you were thinking it was going to be? When it comes to Jerome Powell coming out from the Federal Reserve and seeming as though he's beginning to hint that a recession may be on the horizon, or that a recession may be inevitable and there's not really anything we can do about that, but we're going to do everything in our power to keep the workforce strong. And then, of course, when it comes to the precious metals, do you believe in diversifying beyond silver and gold? Or if you just want to focus on the silver and gold, do you believe in diversifying the way you're stacking silver and gold? Maybe by going after multiple types of precious metals, or maybe by going after different denominations of precious metals, or maybe by going after precious metal coin, round, and bar from this country or from that country, or different levels of purity. What are your thoughts on financial diversification? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.